Hello, and welcome to our next NAP. NAP stands for Nonprofit Auditor Points, and I'm Irina Ryshkova, your nonprofit auditor. Today, I want to talk to you about audits, review, and compilations. A lot of nonprofits asking me what should we perform, audit, review, or compilation, and what is the difference between these type of engagements. Let me talk about it. Just hopefully answer many of your questions that you have. So we have various type of assurance. We have audits, the highest level of assurance, review, it's a limited assurance, lower, and compilation, which is no assurance. The proper terms, it's financial audit, financial review, and compilation. Once again, audit, when we perform an audit, we considered auditors. When we perform financial review, we considered independent accountants. And in compilation, we're also accountants. We can be independent or not independent. For compilations, it's allowed to be not independent accountant. So audits, we provide highest level of assurance and we perform a lot of work when we're doing audits. Review, as I mentioned before, we perform limited amount of work and we provide limited assurance, and in compilation, we provide no assurance whatsoever, meaning we do not express no opinion to anybody if the books or the report that we issue are good or not. All we're saying, we're taking client information and compiling it, putting it together in a proper format. That's really all that we do. So let's see very quickly what procedures we as auditors do when we performing various type of work. So when we perform audits, we obtain financial information from the client, then we learn the client internal policy and procedures. We learning who initiates transactions, invoices, obtaining payments, who records them in accounting system, how and when the accounts get reconciled, who approve the transactions, and so forth. So we learning a lot of organizations' internal policy procedures, including involvement of the board, management, and other employees of the organization who involved in accounting procedures. Then we assess risky area of the organization. Typically for a lot of nonprofits, it's definitely revenue. It's risky. Sometimes it could be receivable areas risky, net assets restricted with donor restrictions, without the donor restrictions. For risky areas, we decide, and for not risky areas, once we assess the risk, we decide how we're going to test each area, and we design substantive testing procedures. And a lot of those procedures involved a lot of details. We're pulling individual transaction support, we're pulling invoices, bills, bank statements, grant letters, so a lot of individual transactions. We're drilling in to individual transactions when we're doing audits, and then we issue an opinion. In review, we do not dive into very individual transactions. We look at financials, we see analytically if a lot of accounts make sense, balances. We inquire the client about some fluctuations that not consistent with last year's, and we get the answers and we see if the answers are plausible, and if there are, we are satisfied. So pretty much we can just base our testing internally between auditor and the client, inquiry and analytical procedure, that's sufficient. In audit, we not stop in the inquiry and analytics. We go to obtain support that available from outside third party, like invoices from the third parties, grant letters from the third parties, bills that the client sending to the third parties, contracts between the client and the third party, right? So we need to obtain a lot of outside support to verify or corroborate information that we received from the client. So for Audits, it's much more robust assurance. Review, very limited assurance, and it's pretty much stops in inquiry and analytics. So what auditors ask when performing audit, or when we do ask when we're performing reviews? In audit, again, we typically ask all financial reports for the year. We're asking trial balance, accounts receivable aging, accounts payable aging. We ask documents of internal control documentation, your policies, procedures. We're asking minutes of the board of directors. We're asking all reconciliations for all balance sheet accounts, like your prepaids, inventory, fixed assets, net assets. And audits are very laboring. Therefore, we review a lot of information. One point I want to make sure that nonprofits do understand: there is nothing specifically need to be prepared for the auditor. All the information that we're asking, it should be available. That's a normal operational procedures that auditors need to, the nonprofits needs to do, that they have to retain and have those reconciliations, regardless whether your nonprofit do audit or not. These schedules should exist, and the auditors just want to verify to see them. In review, we're asking again all financial information, but again, we're not going to ask for individual contracts, invoices, bills, and support for individual transactions. And in compilation, we'll only ask for financial information and some permanent documents. We call it permanent documents, like such as articles of incorporations, bylaws, maybe some loan documents, but it really depends who's performing your compilation. So again, it's very different amount of information that we're asking. In audits, we're asking for a lot of information, because during the audit we ask a lot of information, we look in the client system of internal controls. We also issue recommendation letter if we find anything in internal control is working, not working, if we see something that we believe nonprofit is doing incorrectly. We issue the recommendation letter where we can identify significant deficiencies, material weakness, or just other recommendation to nonprofits. No such thing we do for the reviews or compilations, because we really do very limited work for review and compilation. So therefore, really recommendation letter auditors provide for the audits. And time-wise, audits typically take between, I want to say, 7 and 12 weeks. Again, depends on the size of the client. Our clients are relatively small nonprofit, about $2 million threshold in revenue. So reviews are typically between 4 and 6 weeks, and compilation could be couple weeks. And that cost affects the cost. So if your board have a question why audits are so expensive, because you can tell them it's very laboring. It's a lot of work involved, and a lot of information needs to be reviewed and tested by the auditor. For the audit and review, we have to be independent. It means that we need to be independent in fact, in an appearance. We cannot have any connection with a nonprofit in order to perform audit or reviews. We cannot make any management decision, and we have to be very careful that we do not cross the line to be independent auditor or independent reviewer, and just become a consultant, right? So for the compilations, we don't have to be independent. Compilations can be performed by independent auditor or your internal person. So, but that information needs to be disclosed on the report, but independence is not required. It means that even your bookkeeping firm or even a CPA that you're working with, who does your maybe monthly reviews, still can perform compilation. So compilation is not required to be performed by independent CPA. Sometimes we get the question, if we hire different audit firms, is report gonna look different? And the answer is no. All auditors, we audit are not freestyle. We do design audit procedures based on our experiences, our understanding of the nonprofit. However, final product audit report is based on the standards. It's very standardized document. Auditors have very little freestyle or ability to change it. Maybe some footnotes will be paraphrased, put in a different order, but pretty much audit report, regardless who is your auditor, gonna look pretty much the same. Very quickly, I will also want to mention about materiality. We as auditors use materiality for audits and reviews, meaning if the amount's very small, we might not test those amounts or not consider them as much as material amounts, large amounts, and do more testing around significant material transaction. However, I want to mention that materiality is a term applicable for the auditors, and that term should not be used by bookkeepers or management, because materiality, it's not just a word, it's a specific amount which depends, and it's its own amount for each organization, and every year, even for the same organization, materiality could be different, and that's typically what we calculate when we perform an audit or financial review. And finally, let's talk about how your nonprofit can decide what type of engagement to perform: audit, review, or compilation. So first of all, I want to say your nonprofit need to at least take a look at 5 areas. Number 1, your state requirement. State requirement, each state has its own requirement that nonprofit needs to satisfy. For example, in California, there is California Integrity Act from 2004, where it indicates that nonprofit that operate in California, and if their revenue is more than $2 million, they have to perform financial audit. That includes in-kind revenue. However, that $2 million threshold can exclude government support, for which nonprofit organizations provide separate reporting to that funder. Typically, it could be state, or maybe it's county. And if the county does not require separate audit, and you do believe your nonprofit provides separate accounting and reporting to the county, you can remove the amount of revenue from $2 million from your total revenue to see if you will be below $2 million threshold, and then you might not require to do an audit. But if you have questions, please take a look at the California Integrity Act to see if you can exclude any government revenue from that threshold. Other states have different requirements, and it's a great resource that there's a great resource that National Council of Nonprofits provides. They have on their website state law nonprofit audit requirements, where there's a guide for 50 states chart, and you will click and you will see if your charitable nonprofit must conduct an independent audit. Some states have a threshold of $500,000. Some states have even lower thresholds. So that's number 1, your state requirements. Number 2, definitely you want to take a look at federal requirements. If your nonprofit spent more than $1 million, either in direct support from federal government or pass through, does not need to be direct. It could be from the federal to state, from the state to another nonprofit, and then it will end up in your nonprofit. So if this federal sourced money and you spend more than $1 million, you might be subject to specific type of audits. It's called single audit. It's a separate type of audit, but you also need to do that audit. So that's number 2. Number 3, you want to look at individual funder and donor grant letter. And a lot of counties, cities, or even private foundations and charities, if they support your nonprofit, they might have their own requirement on their grant letter where it would say that they require nonprofit to go through independent audit or review. So that's number 3. Number 4, board members might decide that they want to satisfy their own duty of care, and because the board are not involved in financial activities, they want to make sure that they have a separate auditor annually audit the books and provide independent opinion that financial statements of the nonprofit are not materially misstated, and the donors and funders might be assured that their money properly accounted for. And number 5, nonprofit needs to assess if they will require the audit in order to apply for new grants, to pursue any grant applications, and see if they might be in future there's a potential they can do fundraising with the audit report. So if you consider at least those 5 areas to see if your nonprofit needs an audit, I think you will satisfy most of the requirements. Just to summarize, audits are expensive and required a lot of time from the auditor and from the nonprofit. Audit's also a very good tool for nonprofit to make sure that they show to the funders, donors, that they are in compliance. Tax filing Form 990 has a checkbox that indicates the nonprofit performs audits or reviews. And audits also provide overall oversight to the organization to make sure that their books and financial records are in good standing and correctly stated on their financial statements that nonprofits release to public. Hopefully that was useful. Hopefully your nonprofit will perform audit, and thank you so much for being here with me today. I am looking forward to see you for the next nap soon. Have a wonderful day. Talk to you soon. Bye-bye.